Hey there, everyone. Welcome back to our channel. If you're new here, I'm your name, and today we're diving into a topic that is crucial for anyone looking to invest, risk tolerance. Now, you might be wondering, what does risk tolerance have to do with my investment strategy? Well, you're in the right place to find out. Before we jump in, let's start with a key question. How much risk are you willing to take to achieve your financial goals? Understanding your risk tolerance is the first step in crafting an effective investment strategy. So, let's break it down. Risk tolerance is essentially your ability and willingness to lose money on an investment in exchange for the potential of greater returns. It's influenced by several factors, including your age, financial situation, investment goals, and even your personality. Let's explore these factors one by one. First, let's talk about age. Generally, younger investors can afford to take more risks because they have more time to recover from potential losses. For example, if you're in your 20s, you might invest heavily in stocks, which can be volatile but have higher potential returns. A 2020 study by the National Bureau of Economic Research found that younger investors often allocate over 70% of their portfolios to equities. On the other hand, as you approach retirement, your risk tolerance typically decreases. You might want to shift your portfolio towards more conservative investments, such as bonds or dividend-paying stocks, to protect your capital. A common rule of thumb is to subtract your age from 100 to determine the percentage of your portfolio that should be allocated to stocks. So, if you're 60, you might consider having 40% in stocks and 60% in bonds. Next up is your financial situation. If you have a stable income and a solid emergency fund, you might feel more comfortable taking on riskier investments. For instance, someone with a high income and minimal debt might consider investing in emerging markets or tech startups, which can be volatile but offer high growth potential. However, if you're living paycheck to paycheck or have significant financial obligations, you might prefer safer investments like index funds or blue chip stocks. A 2021 survey by Bankrate indicated that 55% of Americans don't have enough savings to cover a $1,000 emergency, highlighting the importance of financial stability in determining risk tolerance. Now, let's talk about personality. Are you a thrill seeker or do you prefer a more cautious approach? Your emotional response to market fluctuations can significantly impact your investment decisions. For example, if you panic during market downturns, you may be better off with a conservative strategy. Conversely, if you thrive on market volatility and can handle their ups and downs, you might lean towards a more aggressive portfolio. It's also worth mentioning that your investment goals play a crucial role in shaping your risk tolerance. If you're investing for a long-term goal, like retirement or a child's education, you might be more inclined to take risks. However, if you're saving for a short-term goal, like buying a house in the next couple of years, you'll likely want to adopt a more conservative approach. To illustrate this, let's consider two investors, Sarah and Tom. Sarah is 30 and plans to retire at 65. She has a higher risk tolerance and invests heavily in stocks, aiming for long-term growth. Tom, on the other hand, is 50 and wants to buy a vacation home in 5 years. He opts for a conservative portfolio, primarily investing in bonds and real estate. Their different goals and timelines shape their risk tolerance and investment strategies. Understanding your risk tolerance is essential for crafting an investment strategy that aligns with your financial goals. It helps you avoid making emotional decisions during market fluctuations and keeps you focused on your long-term objectives. In summary, your risk tolerance is a personal metric that can significantly influence your investment strategy. Factors like age, financial situation, personality, and goals all play a role in determining how much risk you can take on. So, take the time to evaluate your risk tolerance, and you'll be better equipped to make informed investment decisions. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more educational content. And don't forget to share your thoughts in the comments below. What's your approach to risk tolerance? We'd love to hear from you. Until next time, happy investing!